Howdy, everybody. Welcome to Liberty Call for Friday, July 18th, 2025. Hope you're having a fantastical day out there in the interwebs. Really nice day here. Sun's out, a little warm, but not too bad out there. Broadcasting note, this is, for now, the last broadcast through DSA Financial Group. The firm is being shut down as of this weekend and moving the practice over to Prudential Advisors, and the custodian is going to be LPL. So clients are getting a bunch of emails already this week from me as far as what's going on. So just wanted to share that for everyone out there who's maybe not a client and isn't aware. So there's probably going to be a break between me doing these videos for the 5 or 6 people who actually pay attention to this. But I do plan on starting it again, probably on a new channel. So keep your eyes posted. I'll share that out there. All right. Well, markets took a breather to close out the week as fresh tariff rumors, this time targeting the EU, put a lid on early gains. The S&P and NASDAQ flirted with new highs before settling flat. Strong retail sales and upbeat consumer sentiment kept optimism alive, while crypto stocks surged on stablecoin legislation. Energy lagged, utilities climbed, and Wall Street wrapped up another winning week. Though trade war clouds are once again on the horizon. So before we break it all down, there's nothing to share today. So because this channel is probably going to be dormant moving forward. So let's just move on to the markets. All right. Dow Jones was down 0.32% today, 142 points, closed at 44,342. The S&P 500 down 0.01, so flat. It was only down as far as points, 0.57. Closed at 62.96. NASDAQ up 0.05, also fairly flat, only up 10 points. Closed at 28.95. The VIX down 0.67. It's at 1641. Canada down 0.27. Brazil down 1.61. And Mexico down 0.78. Going over to Europe, Germany down 0.34. The UK up 0.22. France down France up 0.01. Netherlands down 0.29, Spain down 0.04, Italy up 0.46, Switzerland up 0.08, and Portugal down 0.28. Russian exchanges are in the green today. The MOEX up 0.82, RTSI up 0.66. And the overnight markets, the Nikkei in Japan was down 0.21%, Australia up 1.37, New Zealand up 0.41. In China, the Shanghai was up 0.5%. Shenzhen Component up 0.37, China A50 up 0.68, DJ Shanghai up 0.52, Hang Seng up 1 1/3, and the Taiwan weighted when it closed yesterday on the 17th was up 0.31. Good stuff. All righty, let's bring up our chart and see how we did for the week. 1 week. We're on the Dow. Get rid of my lines. All righty. Here we are. All right. Starting out with the Dow, looks like for the week it's going to be flat, down 0.04. The S&P 500 is going to be in the green by about 0.61. The NASDAQ, grab that candlestick right there. There we are. Up about 1.93. The Dow Transports to be down about 1.48, and the Dow Utilities, that's the wrong stick right there. All right. It's going to finish up about 1.03%. So all in all, kind of a flat week for most of our indexes. Let's go back to the daily chart and take a look. Yeah, we can see here this last week, fairly sideways after the week or so that we had of upward momentum. So again, curious to see how this starts to, looks like we're starting to develop a trend here. So we'll see if that, actually, let me put that line, put it right there for us. So we'll see if that, if it bounces and continues to trend up, or if it breaks through that resistance point. So, all right, awesome. Let's get that off the screen and let's get to the economic data that came out this week. Why did it do that? There we are. All right. Starting out with jobs. Initial jobless claims came in at 221,000 against the 233 forecast. Previous number was 228. Continuing claims came in at 1.956 million. Forecast was 1.97. Previous number 1.954. The CPI year over year came in at 2.7%. Forecast was 2.6. Previous number 2.4. Month over month, the CPI grew by 0.3, right on forecast. The producer price index came in at 2.3%. That's the one everyone was all excited about this week because that's the Fed's preferred inflation gauge. Only came in at 2.3% against the 2.5% forecast. Previous number was 2.7. So CPI was high, PPI was low. So everyone looked at the lower figure and went, "Hey, look, we need to lower rates. Let's not get ahead of ourselves." The PPI month over month was flat at 0. Retail sales year over year came in at 3.92%. Previous number was 3.29. Month over month, we had a 0.6 gain against a 0.1 forecast. Previous number was a 0.9 contraction. Import prices year over year contracted at 0.2%. Previous number was the same. Business inventories month over month were flat at 0, right on forecast. The National Association of Home Builders Housing Market Index came in at 33, right on forecast. Previous number was 32. Housing starts came in annualized rate of 1.321 million. Forecast was 1.29. Previous was 1.263. So a bit of a jump there. Month over month, it was up 4.6% after last month's 9.7 contraction. Building permits came in at an annualized rate of 1.397 million against the forecast of 1.39. Previous number was 1.394, so staying fairly stable, trending maybe a little downwards. And month over month was up by 0.2. Last month's number was a 2% contraction. And the last bit of data, the Michigan Consumer Sentiment came in at 61.8 against a forecast of 61.4. Previous number was 60.7. So the last 2 months have been a little bit more happy, I guess would be the word to use, as opposed to where things were here in the 50s. All right. Let's move into the market recap. S&P 500 gives up gains as Trump reportedly eyeing at least a 15% tariff on EU goods. The S&P 500 surrendered early gains Friday as trade tensions flared once again. According to the Financial Times, President Trump is weighing 15 to 20% tariffs on European Union imports, even if a deal is reached exceeding the 10% threshold EU negotiations had hoped for. With the August 1st deadline approaching, the move is widely seen as a pressure tactic to extract deeper concessions from Brussels, reigniting fears of a broader trade war. Meanwhile, corporate earnings continue to flow in, largely reinforcing investor optimism. American Express beat earnings expectations, driven by strong spending among its high-income cardholders. 3M rallied after raising its full-year profit outlook, thanks to cost-cutting and a pivot towards higher-margin products. Charles Schwab also impressed, reporting robust growth in client assets and higher interest income. Well, I guess they're going to be sad that they're losing my small little practice out of their business, but Schwab's been all right. I actually like the TD Ameritrade platform better. Schwab did incorporate a lot of the things I did like about TD Ameritrade, their rebalancing software and things like that. But it's clunky, so I'm not exactly going to cry about not getting to use it again, moving forward. So jumping back in, Netflix delivered solid Q2 earnings and raised its revenue guidance, but shares slipped as a result to meet sky-high expectations. Despite the dip, Netflix is still up over 43% year-to-date. More major reports are on deck next week, including Coca-Cola, Tesla, Alphabet, and Texas Instruments. Economic data remains supportive. Retail sales and jobless claims exceeded expectations this week, while inflation data remains stable, though tariff-related price pressures persist. The University of Michigan Consumer Sentiment Index, due later Friday, is expected to show marginal improvement. The Fed remains cautious, but Governor Christopher Waller suggested a rate cut could be warranted as early as the next meeting, which would be 29th and 30th of this month, so 2 weeks from now, citing rising economic risks and temporary tariff-induced inflation bumps. Mr. Waller, you created the inflation there at the Fed, so don't blame, again, prices going up because of tariffs is not the same as inflation. Inflation is when you expand the money supply. There's no, I mean, yes, there is a little bit of expansion due to credit, but not in the way that they did it 5 years ago. So, yeah. Anyways, let's see. Pressures mounting on Fed Chair Powell to act in commodities. Oil prices rose on renewed geopolitical instability and EU-led sanctions on Russian crude. Brent and WTI futures climbed around 1% after drone attacks in Iraqi Kurdistan and a new EU push to lower the price cap on Russian oil. All right. Awesome stuff. Got a data report here from First Trust, June housing starts, put together by Nate Guernsey. So let's see what he had to say here. June brought a modest rebound in housing starts and permits, but the underlying data signals continued weakness in the home building sector. Total starts rose 4.6%, driven entirely by a 30% surge in the volatile multifamily category. Single-family starts, the core of the housing market, fell 4.6% and are now down 10% year over year. Permits for single-family homes also dropped 8.4%, pointing to sustained weaknesses ahead. More concerning was the 14.7% plunge in completions, the lowest rate since early 2021, as builders shifted away from finishing projects. The backdrop remains challenging. High home prices, elevated mortgage rates, and a growing inventory of completed homes, and labor shortages due to low unemployment and tighter immigration enforcement. Yeah, tossing out the illegals is gonna have a cost on the home building market, but maybe the young folks in this world will do what I did 30 plus years ago: is go out there, start swinging hammers or bagging groceries or whatever. Get in the workforce, start learning some. You might like carpentry. I mean, who knows? I never thought I'd be a financial advisor. I was going to be an architect. And then I joined the Navy and fixed jets, and I've been in collections and recovery and hunting people down, skip tracing. So I've done a lot of different things in my life. So, anyways, where were we? The uncertainty around tariffs and regulatory burdens only adds to builder hesitation. Reflecting on these conditions, the NAHB Home Builder Sentiment Index stayed at 33 in June, its 15th straight month below the neutral 50 threshold, indicating more builders see conditions as poor than good. Meanwhile, the number of homes, total number of homes under construction has fallen 13.4% over the past year. Historically, such a decline would suggest a housing bust, but post 2007, the U.S. has chronically underbuilt homes. Yeah, we've talked about this before, keeping supply too low to meet demand, while activity may remain subdued due to economic headwinds. The structural shortage is likely to keep home prices rising even as certain overheated markets cool off. I bet as we remove the 80 to 100 million people who are here in the country illegally, probably solve our housing problem pretty quick. All right, last article of the session and of the broadcast from Zero Hedge, pumping the brakes on alternative energy. This was written by Gary Abernathy of the Empowerment Alliance. Let's see what he has to say. Recent piece by Mr. Abernathy highlights the Trump administration's push to reinvigorate traditional U.S. energy production while reining in federal support for large-scale renewable projects. Trump's strategy centers on expanding access to affordable, abundant energy, especially oil, gas, coal, and nuclear, by reversing Biden-era restrictions, fast-tracking natural gas permits, and slashing federal subsidies for renewables. Sounds good, but I mean, it's July. I mean, why didn't you do this in March or February? I mean, all these things should have been done. I mean, Mr. Trump, with all the stuff going on about, Epstein and blah, 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 saying this is a giant distraction and all the good things that his administration's done. This would be one of those things I would point to and say this would be a good thing. So why did it take 6 months? That's my big question. I mean, the only things that I could really point to in this first 6 months that I liked were, the Silk Road guy got out of jail. He was pardoned. The J6 people were let go because holding on to them for years was ridiculous. I mean, especially after the summer before that, where people burned down cities and, the district attorneys in these blue cities just basically looked the other way. And, I mean, I'm sure some people were prosecuted, but certainly not on a level like, the morons who stumbled through the Capitol who got rounded up for taking pictures. All right. Where was I? Abernathy argues that while small scale wind and solar may be viable in specific applications like residential solar panels or micro wind turbines, massive solar and wind farms rely almost entirely on taxpayer funded subsidies. According to the Institute for Energy Research, Treasury data shows wind and solar subsidies cost $31.4 billion in 2024 alone, with projects of $421 billion in additional spending through 2034 due to Biden's Inflation Reduction Act. Trump's proposed energy budget would eliminate billions in clean energy and climate research grants and redirect funding towards developing domestic energy resources and technologies. It cancels over $15 billion in carbon capture and renewable energy funds. Most of this sounds just more like expenses along the way. That's not actually any shovels in the ground or actual things getting done. Cuts of $1.3 billion from NOAA client programs and phases out tax credits for clean energy over the next few years. While some Senate Republicans are pushing to soften the phase-out timeline, Trump has been in vocal opposition, denouncing green energy subsidies as a giant scam, that's in quotes, and calling wind and solar, quote, inefficient and 10 times more costly, end quote, than traditional sources, despite political compromises likely to soften the bill. The shift away from mandated green energy support marks a significant policy reversal and signals a renewed focus on energy independence through traditional means. Well, my libertarian view on things is that these are not federal jobs anyways. I mean, federal government shouldn't be controlling the energy sector by any means. I mean, making sure that it doesn't kill us, I think, is a good thing. You wouldn't want a nuclear power plant next to a house with no shielding in it. Everybody grows, second arm or third arm out of their forehead or something like that. So, but beyond that, I mean, that's really all the state's there to do, is to protect your rights and protect your property rights. Beyond that, them making decisions over whether or not you should use what type of fuel or whatever, again, not their job. All right. Well, that is everything that I had to blabber on about today. I send you off to the website, but it's going to be pages are going to be removed here in the next couple of days as I'm moving over to a new site and everything else. So anyways, hope everyone out there has a wonderful weekend. Keep an eye out for future broadcasts, and we'll see you in the future. Adios.